Welcome to the #InvestThis podcast, where the secrets for real estate investing are revealed. Now, here's your host, Scott Bauer.
Welcome, everybody, to the 59th episode of the #InvestThis podcast. I'm your host, Scott Bauer, and today we have Mark Roderick with us. Mark, thank you for being here. How are you?
I am doing terrific. Thanks for having me.
Yep, love you being here. A little bit about Mark. He's a very boring corporate and securities lawyer at Flaster Greenberg PC in Cherry Hill, New Jersey. Since the Jobs Act of 2012, he spent all of his time in the crowdfunding space, and today is one of the leading crowdfunding and fintech lawyers in the U.S. He writes this widely read blog, www.crowdfundingattny.com, which provides readers with a wealth of legal and practical information for portals and issuers. He also speaks at crowdfunding events across the country and represents industry participants across the country and around the world. He can be reached at mark.roderick@flastergreenberg.com, or you can give him a call at 856-661-2265, and we'll make sure to include that in the show notes for everybody. Once again, Mark, welcome to the call.
Well, thank you very much, and I just want your listeners to know that my bio didn't actually say he is a boring securities lawyer, but you and I were on the phone for 5 minutes before the call started, so you must have just ad-libbed that just based on your own experience.
And no, it literally says that in the bio here. But why don't you give the listeners a little bit more kind of about your background, what you're focused on now, and then let's chat about it.
Okay. Very, very quickly. So I've been practicing law quite a long time, since 1840, I always say. And during that time, have spent almost all my time representing entrepreneurs in everything they do, starting businesses, buying and selling businesses, and represent among those entrepreneurs a lot of real estate folks and entrepreneurs of all stripes, including real estate folks. One thing that they're always trying to do is raise money, as you probably know. Capital being the lifeblood of our economic system. And so, in my career, I've represented tons of people trying to raise capital. And I say that by way of background. When the Jobs Act, which was signed into law by President Obama in 2012, came on the horizon, it was clear to me that this was going to be a fantastic and disruptive and transformative change to our capital formation industry in this country, because it was going to democratize capital and make capital accessible and make great deals accessible to more people, and so on and so forth. So I decided that was a space that I definitely wanted to be in. And so that is what I've been doing ever since. I spend all my time in the so-called crowdfunding and fintech space, helping people raise money, representing investors, sort of every conceivable niche within that crowdfunding space. So that's what I do all the time.
Okay. So, crowdfunding is one of those terms that is thrown around, and I feel like it's a buzzword over the last 5 years that has been very popular among syndicators, among investors that are buying bigger deals. Let's break that down a little bit. What exactly is the crowdfunding space that you're working in? How do people access those crowdfunds, and what can that benefit for them?
Well, okay, so what I always say is, if you're at a cocktail party and someone challenges you and says, what is crowdfunding, Scott? What do you really mean by that? The best answer to that for a cocktail party is crowdfunding means anytime you're raising money using the internet, okay? And then everyone will say, whoa, that is a clever answer. Now, within that world, there are, as you know, sort of two subworlds. One is the Kickstarter subworld, donation-based crowdfunding, where people just ask for money for free from strangers, and that's not what I do. And the second part is what we call equity crowdfunding, where people are making investments. And that is what I do. So I spend all my time helping companies and investors around actual investments, stock, LLC interests. And I'll just very briefly respond to your question. What do you use it for? Well, entrepreneurs use it to raise money. So back in the old days, meaning pre-2012, if you wanted to raise money for a private company, as you probably know, you had to rely on your own network, what we used to call a Rolodex way back when. Whom you knew, whom your parents knew, whom your lawyer knew, whom your accountant knew, all these very inefficient, interconnected, opaque private networks. Very hard, very time consuming, very inefficient. And a lot of middlemen, because there were all these people, well, I'll introduce you to you, and I'll introduce you to here, and I'll take a piece. But with the Jobs Act, now, this afternoon, you or any of your listeners, if you have a business you want to raise money for, you can put up a website and reach every investor in the whole world without exaggeration. So that's what you use it for if you're trying to raise money. On the flip side, as an investor, you today, because all those entrepreneurs are taking that advice and putting up websites with their great deals, you as an investor can access these fantastic deals that used to be accessible only to the very, very wealthy. So that when people like me use the word democratize capital, we're talking about both ends of that telescope. Entrepreneurs being able to raise capital from everybody, and everybody getting to make investments in good deals.
So, I mean, that brings up some questions, because I know that, just to put on a website that's trying to raise money, there is some securities hoops that you have to jump through. Am I right?
You are. And I always say that fortunately there are a lot of complicated legal rules. And I say fortunately, because if there weren't, no one would have to hire me. But so yes, there are some technical legal rules, some hoops you have to jump through, but I always, big picture is crowdfunding is just the internet coming to the capital formation industry. So it's easy to get lost in the forest for the trees here. But yes, anytime you try to raise money from people, even if it's your close friends, even if it's your family members, you are subject to the securities laws, the same body of law that applies to, Facebook when it does its IPO. You're selling a security, and within the securities laws, then you look for an exemption. So when Facebook goes out and does its IPO, it has to go through this huge multi-million-dollar process to do an initial public offering. The securities laws recognize that that is not feasible for small companies. And so over the years, we've had our securities laws for about 85 years. The law has developed a number of exemptions from that requirement. And what you do as a securities lawyer is, for a given company, you try to find the right exemption. What's right for you? What cubbyhole works best for you? So, just to take one example, you could put up a website for a business this afternoon, and as long as you only take money from so-called accredited investors, you are totally home free. You have complied with every securities law that you are required to comply with, which is a pretty simple situation. Now, there are a number of more complicated exemptions, but that is something that was beyond the pale before 2012. If you did what I just said in 2011, you go to jail, period. So just that, it's a gigantic change from the way things used to be.
So an investor like myself, there's a lot of listeners that listen to this podcast that are multifamily syndicators, that are commercial syndicators, people that are raising money to buy large apartment complexes, large commercial deals, etc. Though you're basically saying that it's a lot easier for us to be able to raise money that way as long as we're taking it from an accredited investor. Is that right?
That is absolutely right. It's 100 times easier than it used to be. And there are other exemptions as well. So, if you told me, Mark, I've reached the point where I want to put together a fund, I've been doing individual multifamily projects, and now I want to put together a fund so I can have the capital accessible when I need to write the check, and I want to raise $15 million or $25 million. So then I might say to you, well, let's use a different exemption. And that exemption might be called Regulation A, which you've probably heard about.
Right.
And that's a totally different exemption. And it does allow you to raise money from non-accredited as well as from accredited investors. But it's more time consuming. It's more expensive from a legal and accounting point of view. But it is an exemption that is more appropriate, possibly, for doing a fund than Rule 506C, which was the simple one that I just told you about. And that's what I mean. My job is to listen to what your goal is and to help you find the exemption that best satisfies your need. Now, of course, just putting up a website doesn't really get people to write checks, or at least not many, because I guess there are a couple billion websites in the world, right?
Right.
And a lot of them have stuff on them that is more fun to look at than multifamily apartment projects. And I say that only a tiny bit facetiously, but it's hard to get people to come to your website and then invest, which is why marketing in crowdfunding, I always say crowdfunding is a marketing business. So you or your listeners who want to raise money should be prepared to put significant resources into not only listing the deal, but also marketing it.
Okay. So what challenges do people really run into when it comes to starting up a fund? Typically on a syndication, in an apartment syndication, it's going to be a Regulation D or a Reg D offering, 506C, right, where we're buying or we're raising money from accredited investors only. But I mean, what is the process? Can you walk me through a brief process on how somebody would get this started if they wanted to start raising money, if they found a deal, if they knew what the goal was, but they needed to raise a considerable amount of money for it? As an example, that you want to go buy 200 units. It's going to cost, 15 to 20 million for this acquisition. You don't have all these people. You don't have all the money raised ahead of time. Walk me through the process there. Walk the listeners through the process on how somebody might get that set up so that it could be an easy type of raise.
Well, if it's your first raise, it's not going to be easy, right?
Reality, yes.
That is the reality. So, and people call me at every piece of the spectrum, from this is my first deal, I've never done this before, to I've raised $3 billion of capital, and now I've heard about this crowdfunding stuff. How do I get started? So the answer for the second guy is a lot easier than it is for the first guy. The process is pretty straightforward. Again, most people, not all, but most people, once we talk through all the alternatives, end up raising money from accredited investors only, because it's simpler and it's faster and it's cheaper. And then it's just a marketing question. You start out, whom do you know? But then you're going to have a website presence, and you're going to market that deal. And no, it's not like, hey, man, I need a $5 million equity investment and I'm just going to put up a website this afternoon. That's not, you're not going to have the $5 million, in time for breakfast tomorrow.
Right.
And you may well not have it at all. So it is a struggle to raise dollars for your first deals, even with crowdfunding. Crowdfunding makes it a lot easier. Of course, you can buy email lists. You can have Facebook pages. You can do Instagram. You can think of all kinds of clever ways to market your deals. But it's a slog. I mean, it's a real marketing challenge. On the other hand, what you have is successful entrepreneurs with some deals under their belt, and they are finding it increasingly easy these days to raise money by signing up on either CrowdStreet or Real Crowd. Those are the sort of two big successful crowdfunding websites. A client of mine, and do you want me to use the name? They don't care. I don't want
to
if you like any yours. Sure. Yeah. So there's this client of mine called Tapestry Senior Housing Development, and as the name implies, they raise money for senior housing. Fantastic track record, great group of folks, men and women. And in their, I'm not telling you anything that's not public, but in their latest deal that they have listed on CrowdStreet, they set out to raise something like $13 million. $13 million, big deal for a crowdfunding deal. Their issue now is they have exceeded that goal. So it's
a good problem to have.
It's a fantastic problem to have. So I'm telling you that if you're in that position, you have that track record, the way this was inconceivable 3 years ago. Yeah, I mean, this is showing how crowdfunding is growing. So that the process is get your stuff together, get your investor package together, get your legal documents together, get accepted by the platform, and raise money. Raise money pretty darn quickly.
How long is that process? What does it take to get all the documents together, accepted onto the site? If somebody gets because timelines are very important, right? A lot of times we have earnest money that's at stake. We need to know what the timeline looks like. If I found a deal tomorrow, I need to start raising money next week. Is that a reasonable request?
It is usually going to be a few weeks before the process is all the gears go through. Now let me say, you didn't ask me the question, but I'm going to answer it anyway. What is happening in the crowdfunding space to make investment capital more readily accessible? Well, one of the things that's happening, fantastic development. So I've been wondering for a long time why investment advisors are not coming into the crowdfunding space. Well, it just so happens that the Motley Fool, which is an investment advisor, right? Very successful investment advisor. They have just partnered with CrowdStreet to, they now have a subscription service for real estate crowdfunding investments. So they are picking and choosing and recommending investments. And it so happens one of the ones they recommended was this Tapestry deal. But so this is going to only continue and accelerate. So that's why there's more and more money, more and more people coming into this space, making it that much more attractive.
So what is the cost to do it? And is it absolutely necessary to hire somebody like yourself, Mark, to bring in, to get you onto that crowdfunding space or get you into that platform? Is it absolutely necessary? And then what is the cost involved in order to do so for you?
Well, yeah, I mean, it is definitely necessary to have someone like me, which is just a boring securities lawyer. Because you are selling securities. It's not rocket surgery, as they say, but it's important to do it right. And the cost what you're going to pay me is about $15,000. I will
total.
So that total for your first deal, and subsequent deals are going to be less because we already have all this stuff. So that's not a very big amount relative to what legal fees for syndications used to be. But then if you're going to go on a Real Crowd or a CrowdStreet, you're going to pay them too for the privilege of using their technology platform. And I won't try to quote their fees because I'm sure I'd get them wrong and make somebody unhappy.
Can you give a range? I mean, is it $15,000 like the cost for you? Is it more, considerably more?
Yeah, fairly considerably more.
Okay. But
again, I mean, I'm not going to use my Tapestry folks as the typical client because I think they are very, very successful. But if you can spend, I don't know, to pick a number out of the air, if you can spend $50,000 to raise $3 million of equity, that's a pretty darn good deal.
It's a great deal, especially, you know, if it's a good deal. I mean, I think the important part about that is if you go out and you find a deal, it's got to be a deal because those costs can be absorbed at the end or when the property finally closes, those costs can be absorbed. The problem is that if it doesn't close, now all of a sudden you're out the 15 grand to you, whatever the cost is to the platform to be able to market on there. And so that's, you know, but obviously somebody who's really serious about this would not be buying or getting into this type of a scenario without having an actual deal.
Yeah. And as you know, I mean, real estate is not an occupation for people who are risk averse. So, I mean,
right.
And for example, where I'm doing a deal now for, I don't know that it's public yet, so I won't name who it is, but it's their first time in crowdfunding, good track record, first time crowdfunding. And they are indeed, they're putting down, along with paying me and paying various other costs, they're putting down $250,000 hard money. And they're going to lose it if they can't raise the capital. So that's, but they are going to raise the capital. In fact, I think just in pre-sales, they probably more than raised. But this is real estate. So like everything else, it's easier if you have a successful track record. It's sort of, well, the bank will only lend you money if you don't need it. Yeah, it's always easier to raise capital if you have a track record of being successful for your investors. It's those first few deals that are the hardest, always.
Always and forever. That's absolutely the truth. And, you know, I had a mentor, coach, somebody along the line tell me that, you know, if you're chasing the money will run. But as soon as you stop chasing, the money will find you, right? Especially for a really good deal. So the listeners out there that are wanting to make a transition from small deals to bigger deals, they have a successful track record in maybe smaller multifamily, smaller commercial, or even single family stuff where they've done, you know, a handful of deals and they want to start raising money or want to get into the larger space. What does that entail? I mean, at that point, they don't have a successful track record in large or in big syndications yet, but maybe they have a track record in other areas. Is that?
I would, again, I don't work for CrowdStreet or Real Crowd, but I know both companies extremely well and have a tremendous amount of respect for them. I would, if I were that developer that, you know, that you're talking about, I would pick up the phone and call those folks. I would have a conversation. They all are always looking for new developers, new deals, expanding their businesses, which both are doing very successfully. So I would definitely try that first.
So somebody at the very beginning, would it be in their best interest to call somebody like yourself and say, hey, this is our plan. This is what we're trying to do. You know, we want to go and we want to buy this type of asset. We're looking at probably acquiring at this purchase price or this area. We're going to have to raise money. Would it be, I mean, you know, is it smart for them to call you first and give you kind of the heads up and say, you know, hey, would you like
would, yeah. And I should say I talk to people all day long. I don't charge for the first phone call, so I often get people pointed in the right direction, even if it's not time to hire me now. It's a lot better doing it that way than going on Google and trying to do your own research and become a crowdfunding legal expert on your own. That's not a good spend of anybody's time. So yes, I have call me, even if it's a 10 or 15-minute conversation, I can almost always get people to say, wow, okay, that's great. Boy, I'm glad I spoke to you. So now let me go do this and then I'll get back to you. So yeah, it is a useful exercise for sure.
And then do you also help people with the structure of the deals and kind of how, the PPMs, how the PPMs are put together?
Oh, yeah.
You develop all of that? Is that all included in a fee that you
Yes,
would
it
charge?
is. Yep.
Okay. Okay.
I do all that, and I give people advice, what's going rate, what's the waterfall, what's the pref, what's the promote, all that kind of stuff.
All the different stuff. Because I know for a lot of people, myself included, when I first was getting started, this was all like, what are you talking about? I had no idea what you were talking about. And it's important information. And I think for a lot of investors out there that are just getting started, understanding what all the costs truly are to put a deal like this together is really important. Because if you don't know, it's hard to have educated conversations with your investors. It's hard to really understand what it's going to take in order to get one of these deals done. So I think that's,
yes.
So, I mean, where do you see yourself going from here? You're helping people. The crowdfunding space is very, very popular. 5 years from now, where are you going to be? What are you going to be doing?
Well, I hope I'm doing a lot of skiing because I'm a big skier, but I hope I'm still doing this. I know the crowdfunding space is only going to get larger and cooler and more exciting because, in the 1990s, when people were just starting to book their travel plans using Expedia, and the internet seemed like this really weird thing. So we're kind of at that stage with using the internet for capital formation today. The capital formation industry in this country alone, as you probably know, is a multi-trillion-dollar a year industry, not billion, but trillion. And it's just the internet. And so the internet's just going to get bigger and bigger. And we're going to see the crowdfunding industry just continue to expand. The deals are going to get bigger. More and more players are going to come in. We're going to see all kinds of innovative, like auto investing tools. And I'm already representing people, inventing those things now. The capital is going to, just the spigot is just going to get turned on higher and higher and higher. You're going to see more and more capital pouring into the space. And I'm going to love it because not only I pretty sure I'll be busy, but I just think it's so cool what crowdfunding can do for the American capitalist system. Hopefully, along with other things, address some of the severe wealth and income inequality issues that we have by giving ordinary Americans access to great deals and access to capital and all that good stuff.
Now, I would agree with you 100%. It's very exciting times that we're living in. I would argue that we are living in the best time possible to be alive, and there's a lot of reasons to back that up. But
I agree with you completely.
I want to talk about very, very briefly this Regulation A. Now, I don't want to get into a lot of details because I think it's important for the listeners to understand all the different components of the regulations that have already been out there. But I know this Regulation A is something that is kind of new. Am I right there? It's a newer.
Yep.
Yeah. So it can actually give access to pretty much anybody, even for a $50,000 or even $10,000 investment, right, into a deal. Is that correct?
I have clients who have done Reg A offerings where they allow $100 investment.
So somebody like that, I mean, that, if you get $100 investments, that's a lot of people to deal with. Not probably would be my first option. But can we talk about really, really quickly what the major benefits of that are?
Yeah. So to do that, I do a very quick, all the way back in history, beginning of the U.S. securities laws, 1930s. We've just had the Great Depression. And the securities laws are now created like the Big Bang, starting in about 1932 when Franklin Roosevelt is elected. One of the foundational principles of the U.S. securities laws is that wealthy people can protect themselves because they can hire expensive lawyers and accountants and advisors. Non-wealthy people cannot. And so non-wealthy people need the arm of the government around their shoulders to protect them. And that system has worked pretty darn well. We have the most vibrant, healthiest, most transparent capital markets in the world. But I give you that piece of history. Now, zip forward to answer your question. So I told you that your listeners who want to put up a crowdfunding offering to accredited investors only can do it this afternoon, right away, no problem, no rules, wild, wild west. And the reason is it's to accredited investors only. They can protect themselves. Accredited investor being a stand-in for wealthy people. Regulation A, on the other hand, in Regulation A, everybody can invest, not just accredited investors. And therefore, it stands to reason under this foundational principle that if you're a syndicator and you want to raise money using Regulation A, you have to go through this long and, relatively speaking, expensive process to get your deal approved by the SEC. You don't have to do that in the accredited investor only world, none of that. But now you're dealing with non-accredited investors, so you have to actually go through a process. It might take 5 months, soup to nuts, to get your deal approved. And now, to answer your question, the benefit is you can include everyone in the offering, not just accredited investors. And whether that matters to you depends. There are two reasons to include non-accredited investors. One reason is they have money, right? Non-accredited investors have money too. And particularly, so if you live on the East Coast or you live in California or West Coast, you can sometimes think, well, all my friends are accredited investors. You know, I know plenty of accredited investors. Well, if you don't live on the coasts, and I'm being very general, there are a lot more non-accredited investors, successful people who have investable assets, but don't earn $200,000 a year.
Right.
And so it makes perfect sense if you're trying to raise capital. And I want to include those people in my deals. They have money. So that's one good reason. The other good reason, and I've had clients definitely who have done this, is ideological. They say, gosh darn it, it's not right that only wealthy people get to invest in good deals. It's just not right. It's not fair. It's not American. So a reason to use Regulation A and allow non-accredited investors because you think they should be allowed into good deals. You know, if you don't, if they're not accredited, they don't have $1 million in net worth. Well, if they can't get into good deals, they're never going to be accredited. And you're just going to perpetuate and deepen those wealth disparities that are really like a plague on our society. So those are two excellent reasons for using Regulation A to raise money.
That's pretty exciting. And you know what? I really appreciate you sharing the information that you have today. It's one of those things, like I said, that it's kind of been the buzzword, at least in my world, over the last 5 years, where, you know, this is a new technology that's allowing people to raise money using the internet and in the correct way. And like you said, it's potentially giving the ability for the general person out there to be able to invest in a deal that they would not have otherwise been able to do so, you know, whatever, 10 years ago, or I guess prior to 2012. So I'm sure that the listeners out there have a lot more questions. And of course, we can't talk about it all today. But as we're coming up on time, are you ready for a lightning round?
I am.
All right. Let's get it started. What is your hashtag invest this tip to keep our listeners moving forward?
Well, given the scope of what we covered today, if you haven't done so, this is my tip. Go sign up as an investor. You don't have to invest, but go sign up at both CrowdStreet and RealCrowd and spend 15 minutes at each site clicking around. That's going to give you so much information that I can't really convey, but it really shows you the lay of the land.
Yeah, that's awesome. I actually am not part of either one of those crowdfunding spots, so I'm going to get on there myself. I encourage all the listeners to do so. Thank you for sharing that tip. Do you have a favorite book that's had a massive impact on your life? Something you've read that's changed your world that you can share with us?
Well, yeah, so I'm a history guy, and I will say, I mean, I've read just tons and tons of history, but the first history book I ever read was by a guy named Dumas Malone, and it was a 5 or 6 volume biography of Thomas Jefferson. And I read that thing, believe it or not, 3 times through. all 6 volumes, and it just had a hugely important or significant impact on how I view the world, how I view history, and how I view people. So it's probably the first of your guests to ever say that about that book, but it was hugely important for me.
You know, you are the first person to ever say that. I've never heard of that series before, but I can tell you that our forefathers did things for a reason, and there's a lot of information to learn from them, right? So I appreciate you sharing that. I can't say that I'm going to go out and run out and grab that book series right now, but, you know, I'll put it on the back burner.
Next week.
Next week, that's right. Who has given you the best advice that has allowed you to really move forward in your life and in your business?
Well, of course, a lot of people have, and I'm very appreciative of that. But there was a guy named Mike DeLaurentis when I was a first-year lawyer, and he was maybe a 4th-year lawyer. You know, so to me, he was like a real old guy. And I was doing a project one time, and I had, you know, I was a smart young guy, smart aleck, and I had cut some corners. You know, I hadn't done a complete job. And he said, you know, stop. You're not going to be successful that way. You have to do 110% job on everything you do. That's, you know, what can I say? That is the right way to act. And as soon as he said it, I knew it was true, you know, and I was ashamed that I had not done the full job, but that was such wonderful advice. And I try to give it to other people, and they either accept it or don't accept it. But whatever you're doing, you just have to do it perfectly, or as perfectly as you can do, for what that's worth.
That's a great tip. I do appreciate you sharing that. Don't cut corners, I think, is the way to sum that up. You know, do things the right way the first time. It's one of those pieces of information everybody knows, but it's always good to be reminded. So thank you for sharing that. How do you give back? How do you like to give back?
Well, aside from my sort of charitable interests, as I said, I get phone calls every day from all across the country, and in fact, all across the world, of people who want to talk about crowdfunding. And only a small percentage of those people become clients, and I know that only a small percentage is going to become, you know, paying clients. And I can often tell, you know, in the first 30 seconds of the phone call that, you know, there's no way this person will become a client. They don't, you know, they just don't know enough. They don't have enough. But I talk with them anyway. I talk about crowdfunding with people and point people in the right direction. And I kind of feel as if that's my role. In this industry has given me so much, and I believe in it so strongly that it's my role to give back in that way, to be a educational source. Whether it's people, you know, trying to raise money for nonprofit causes or something, or people trying to raise money, entrepreneurs from Detroit or all over the country who
Phoenix.
just need some Phoenix. Well, you guys are already set for life there, but you know, people who need advice, and I might be one of the few people who can give them advice. So I try to give back that way.
And that's huge. I think a lot of people would think SEC attorney think, oh God, this guy or girl is just out for my money. They're not really out there to help. And it sounds like, in this call that we've been able to spend time with each other, I can realize you're a genuine person. So I know that I appreciate that. So does everybody that's out here listening to that. So that's a good way to wrap up the last question. How can the listeners reach you if they want to learn more about crowdfunding, want to get involved, just call you to pick your brain? Where can they find you?
Well, the easiest place to find me is my blog, which is crowdfund and then attny.com, crowdfundattorney.com. But if you don't have a pen and paper and you just type my name, Mark Roderick, crowdfunding attorney, you will, I've had a lot of people call me and say, Mark, I can't even avoid seeing you when I do crowdfunding research. So, and all my contact information is up there. The best way is shoot me an email and we will set up a call. Time to talk.
Sounds great. We'll make sure to include that in the show notes for all the listeners out there that didn't have a pen and paper, or maybe you're driving, so that you can get in touch with Mark if you have questions. And once again, Mark, man, this has been great. It's been very educational for me. I appreciate you being here, sharing all your wealth of information, and I look forward to staying in touch. We'll see what our next call looks like.
Thank you very much, Scott. Great being on your show. I appreciate it.
Yeah, we'll talk to you real soon. Take care.
Thank you.
See ya.
Make sure to like, subscribe, and share this podcast to help us spread the word. Go ahead and reach out to Scott Bauer on all the social media outlets for suggestions on topics and guests for the show. And check out investthispodcast.com for more secrets and resources to achieve real success in real estate.